You want it to be boring. You want it to be where if you lose, who cares? I'm still going to do this same model on the next setup based on the logic. If the trade failed here, but the overall conditions of the marketplace are as they should be still, I'm going to take the next setup. There it is. It's done. I already have it in my head. That's what I'm going to do. Unless I'm proven incorrect. And therefore, I either need to move to the sidelines and wait for new information or reverse. But that's not always a reverse. In the beginning, that motivation, hey, I'm going to get in this trade, and you do it wrong. Or if you get squeezed out of the trade because you don't have a stop loss because you chased price, that pressure that you're feeling is going to make you think you got it wrong, and you'll abandon your model. And then what do? Become impulsive again and say, oh, I got it wrong. Not realizing that you just didn't do what you were supposed to do and wait for the setup. You'll reverse in the natural progression of the retracement that your original trade idea should have been waited for. So you did it wrong, chasing it. Then you're scared because it's retracing on you, and you reverse. And then the trade goes where you want it to go. But then here's where you lie to yourself. I knew this was going to happen, and the broker, they slipped me, and I had to you're lying. You fucking chased the price. You did it incorrectly. And then you changed your mind because you couldn't handle the pressure of the retracement because you were misplaced. You weren't offside. You had a poor entry, poor execution. You did it poorly. You should have closed the trade, sat and waited for the setup. Not make one decision incorrectly and then impulsively fix a mistake doing the opposite, where the analysis didn't say anything about that trade reversing and going lower. You succumb to your own emotions and poor psychology that's now being stirred up because you're in the market, you chased price, and you didn't do anything, and you completely lost the plot. Uncomfortable, isn't it? It just happened to you this week, didn't it? Market went where you thought it was going to go, but you lost on your trades. I just pegged you. How do I know it? Because I did that when I was 20. I did it. Multiple accounts. Some of it resulted in losing trade accounts entirely. Do you need to lose your trades in stunning fashion or blow your accounts to learn that lesson from me? I would have loved to have someone explain it to me like this. I would have never looked at them and said, wow, dude, you're talking about all this terrible stuff. Like, motivate me, man. I would have never done that. I would have been like, you know what? This is exactly what I need to hear. You're not fluffing me up with some bullshit. You're not here promising me that I'm going to get rich overnight. You're giving me the things I have to concern myself with, that I'm going to have to wrestle with. These are the real things. These are the brass tacks of trading. And when you hear it, it feels like I'm talking down to you, or someone new to come here. Oh, I don't want to listen to this guy. He's talking down to his students. No, I'm not. No, I'm not. I'm talking to you eye to eye. I'm coming to where you are because I've been there. I'm not talking down to you. I'm taking myself right back to the location where you're at right now and telling you, the guy that you look highly up, and have high regard for now, I didn't get this insight, by having fucking candy bars shoved up my ass, okay? It hasn't been easy. It's literally a war. You have to go through a lot of stuff. And books just don't make it plain enough for you. Like, you have to go through it. And it's not easy. There is no shortcuts to it. It's all normal, though. And the way you get through it is to get through it. And how do you do it successfully? By not having a whole lot of result-oriented, progress in terms of a monetary sense. So remove that. Come on. Listen, you don't have any excuse why you shouldn't wait for your setup to form. If you miss it, if you get a stop out, or if it doesn't work for that one setup, you did it wrong. Guess what that means? You have an opportunity, maybe in the same day, to correct it or study it and build your confidence back up. But you're taking motivation and turning it into mania. I want to rush through this, learn how to do it, because I'm going to go and try to do 5 or 6 maximum funded account. And I'm going to do this and do that with the trading. And I'm going to be an overnight success. No one's going to be able to do it faster than me. I'm going to be the fastest meteoric rise in funded account trading. You're making it harder than it needs to be. You really are. And you might get a little bit of success here and there, but you're going to go out there and flaunt it like it was the easiest thing since, riding your bike now, which you've probably been doing your whole life. It's easy. It's like riding a bike now. And you're going to lie to yourself, and you're going to lie to anybody else that's listening. Like you're providing all of the outside noise and justification that's not helping you. You're willing to go through all those things. You're willing to enter the trade when there is no setup. It hasn't formed yet. The framework is likely to be there. The draw on liquidity, where it's going to go ultimately. You're in the session, it's probably going to go up there, but right now it's running in the direction of the trade profit. You don't want to enter like that. You wait for it to draw down into a PD array or up into a PD array if you're bearish. And then by doing that, you know that there's a range in which it's permissible. It can color outside that fair value gap a little bit. But see, when you impulsively enter, what you're really doing, and this is the truth, folks, you're afraid that this thing that you're trying to do as a model is going to fail in your own hands. And you know that if it does, and you do everything that you think is correct, you're not going to stick with it, and you're going to start all over again chasing something else. And folks, I just nailed down 90% of you motherfuckers. You don't want to listen because you're afraid you're going to do it wrong. And then you're going to fault the model. You're going to fault the approach. And then you, because you're impulsive, you're going to go out there and chase Elliott waves. You're going to chase harmonic patterns. You're going to chase some other bullshit. Crazy, ain't it? How could I know this? Because I did the same stupid shit. I've done the same stuff, folks. You have to change your perspective. You have to be accountable to yourself. And you also have to give yourself the opportunity to do it right and have the fruits of it. Just like when you win and you have a series of good winning trades and it's still Tuesday. But that's not an invitation because you have Wednesday and Thursday and Friday still to trade. Well, I got to push my edge into a dull, blunt fucking edge. So many times I've seen students, and I've done this before, you go in there, you get a windfall victory in the beginning of the week, much larger than you normally would. You're like, man, I'm really good at this shit. I'm going to go out there and I'm going to impress my wife. She's finally going to realize this ain't a video game. Watch, I'm going to tell her what I'm going to do over here, and boom, boom, boom. And then there it is. You get back half of it, or a third of it, or worse, all of it and more. Then you go into the weekend with a loss. That is demoralizing. That sucks. That really sucks. Especially if you showed everybody online in the beginning of the week, here's what I made, here's what I made. And then they're like, progress report, where you at? MIA, baby, I ain't coming on. I got things to do. Radio silence. You're making it harder on yourself by doing that. So you have to weigh all these things out and also provide no opportunity for them to be in the trading, so it becomes less of an impact adversely. Because it's real easy to talk yourself out of this because it's hard. It's really, really hard. And what makes it hard is that you are equating success and failure on a personal level. Not every single trade is going to yield the best review. The outcome is not going to be the favorable one. But does it take you out of reaching for that model or having faith in it being useful in the future? No, because it's just like that cookie cutter. You can't ask the cookie cutter to be a rolling pin. It's not its function. Just like you can't ask the silver bullet to be there, in times where it's not favorable for it, where there's a consolidation and it's going to consolidate in Asia or after 4 o'clock going into 5 o'clock, afternoon session. There's no silver bullet between 4 p.m. and 5 p.m. But the market's moving. It's still ticking around, but there is no setup there. I would never look at that and say, this is a silver bullet, this is a fair value gap I would sell short or go long in, because of the timing of it. You're asking that model to exist in a time when it's not going to be there, which is the equivalent of taking a cookie cutter and saying, I'm going to use it as a rolling pin. It won't work. It doesn't work. It's not a hammer. It's not a screwdriver, But that cookie cutter, if you lay it into dough, okay, you take that dough and you spread it across your counter, and you take that cookie cutter and you press it down into that dough that's rolled out. And when you lift that cookie cutter up slowly and you follow all the processes of rolling the dough out, taking the cookie cutter, pressing it down in, maybe slightly twisting it back and forth a little bit, and then slowly raising it up, you're going to have a cutout of that dough in the form of that cookie cutter. That's what your trading model is. That's what I'm teaching you to look at, that 5-point run, that 5-handle run in the S&P. Because if you can do this, if you can stick to the process of handling that cookie cutter, the fair value gap silver bullet that takes 5 points or 5 handles out of the marketplace, and you consistently are able to do that and nothing else, guess what you're doing? You're forging patience. You're forging real experience that no one can take away from you. And you're learning a lot about yourself, what you're going to be feeling. Are you feeling impulsive? Are you feeling impatient? The trade's not panning out fast enough for you? The way you get over that is by being in the marketplace, doing it. You have to engage it. And then you won't feel impulsive, like, I just got in this trade 30 seconds ago. It should have already done 5 handles by now. I know what it feels like. You want it to be painless, and I'm telling you, it's going to be painful. But it's worthwhile. It's worthwhile doing it. You got an outcome that is worth doing. That is not 100% success, but that less than 100% success rate equates to your success ultimately. But you're trying to avoid any losing. You're trying to avoid any kind of hardships or any kind of embarrassments or discoveries about yourself. And you want to not fail using it because you're weak. You're undisciplined. You have no sense of self-responsibility. And you know yourself well enough that if you fail using the model based on the rules, you're going to associate that one failure with it's ultimately sucks, it's fraud, and I'm never going to be able to do it. And I have to justify things outside myself, hold myself to no accountability, and I'll have to chase something else. And I don't want to do all that again. That's the reality, folks.